Are financial advisors worth it? In this video, I'm going to tell you what I've learned from working with financial advisors, and I'm going to tell you 5 things that I think you can ask yourself to decide whether or not financial advisors are worth it for you personally. Hi, I'm Camille Gaines. Here and on my website, retirecertain.com, I write about our income stream adventure over the past 15 years or so after stumbling into early retirement and our wealth building later in life. In this video, I want to share with you what I've learned from both working with financial advisors and investing on my own for about 40 years now. If you like this information or think it interests you, make sure you subscribe to my channel and click that little bell so you're notified when I post a new video. The very first question that I would pose in deciding whether a financial advisor is worth it for you personally is whether or not you can get a better return on your investments after fees are considered. We forget that the whole reason we invest is so that we can get a certain investment return, so that we can live a desired lifestyle. We buy our investments, we put our money into investing, whether with an advisor or on our own, so that we can get a certain result that we want from our money, just like when we go shopping for anything else. And so when investing our money, we really have to just say, can I get a better result with a financial advisor after fees are deducted, or can I do a better job on my own? So that's the very first question I would ask. Keep in mind, the average amount for $1 million portfolio is about 1% for a financial advisor. That's according to Advisor HQ. For smaller amounts, or assets under management as it's called in the financial lingo, for smaller assets under management, the fees will be higher in general, and for more assets under management, those fees will probably go down. But in general, for $1 million portfolio that a financial advisor or wealth manager is managing for you, it's going to cost about 1%. The second question is, are you willing to take the time it takes to learn how to invest and actually make the investments on your behalf and manage your portfolio? If you're not willing to do that, or you just don't want to do that, if it seems awful, then it really doesn't matter in trying to figure out any of these other things, because investing your money takes time. It takes time to learn how to invest, and it takes time to take care of it. Now, having said that, I will say that investing, I don't think is that hard. It's really not that complicated anymore, because ETFs are available, or index funds are available for individual investors to use to invest in, to be able to create a diversified portfolio. The days are gone when someone had to spend hours and hours analyzing stocks, picking bonds, creating that diversified portfolio from individual securities. Now diversification can be achieved from index funds or ETFs, and really the way that your portfolio is invested by most financial advisors is simply saying, based on your age and the amount of risk you're willing to tolerate, that 50%, 60%, 70%, 80%, whatever should go into stocks, and the remaining into bonds. And it may go a little bit deeper by saying, well, we'll put 20% in international or whatever, or maybe a little bit in commodities or something like that. But in general, that's sort of how it works. And it's just not that complicated. However, having said that, it's important to understand how to do that and where you can do that in a way that's the most efficient and the lowest cost for you. If you answered yes to the last question, the next question is really, really important. And for some reason, it's so often overlooked. And it's whether or not the financial advisor is beating the benchmark after the fees are taken out. All right, let me tell you what I mean by that. All sorts of investments have a benchmark or an index that you can measure the performance against to see whether or not that financial advisor or that investment product or whatever it is that you're evaluating, how it performed when measured against the benchmark. So for example, I'm sure you've heard of the S&P 500. That's the benchmark that's used for large company stocks in the United States. Similarly, there are benchmarks for gold investments. There are benchmarks for bond investments. There are all kinds of benchmarks. And benchmarks have free published information that shows you exactly how they've performed over various time frames, and all you have to do is look and see if a financial advisor has done better than the benchmark over those time frames after you take out the fees that you're paying for the wealth management. So comparing the performance to the benchmark is probably one of the most important things, yet so few people do it. Either they're uncomfortable asking the financial advisor, or they're just not really sure which benchmark to use. But usually the benchmark is revealed in the investment performance information that you will get from any financial advisor or wealth manager, or even a fund if you're doing your own investing that you're comparing that to. The fourth question to ask is, does having a financial advisor help you make more money elsewhere? This is really, really important. So if you're going to just make 0.5% more on your investment account, and your investment account isn't that big, yet you're going to suffer on your job, maybe miss out on a $100,000 bonus, or you're going to not have time to invest in alternative investments, which is one of my favorite things to do, such as buying a piece of real estate property that could provide cash flow to you, pay for itself in a couple of decades, and build wealth for you. If you're not going to do that because you're spending time on investing your portfolio, then maybe it's not worth it. Maybe it would be better to hire a financial advisor to take care of your core investment portfolio in stocks and bonds, and then that frees you up to be able to make alternative investments, or to be able to make more money on your job, or maybe start your own company. The fifth question to ask is, does having a financial advisor significantly improve the quality of my life because I'm not stressed out and worried about money all the time? If this is the case, then it may be worth it to have a financial advisor. Having said that, I want to say this is so important. A lot of people feel like if they have a financial advisor, they can just turn everything over and they don't have to pay attention, and they just feel so great about it. And they don't know if these other things are happening, like question 3 that I mentioned, where you check to see if the financial advisor is performing as well as the benchmark. A lot of people will drop important things like that because it does feel so great to turn over the management of your investments to a financial advisor. So that's one thing to consider, is even if you are using a financial advisor, you've still got to be the CEO of your wealth. You've got to manage that person. You've got to hire them. You've got to evaluate. You've got to see what kind of job they're doing for you, because it's very expensive, right? And so that's one thing. The other thing is, are you at a point where you can really make that decision? Sometimes we just have to buckle down and do things until we reach a certain point in our lives where we can go, I have enough money now, I see, to be able to support myself for life. So I'm going to ease back a little bit. But we're not always there all the time, right? And so it can be work to get there, and sometimes we have to do the work ourselves until we get to the point where we can delegate some of it, because hiring a financial advisor really is just delegating. It's delegating the task of investing your money for you. If you found these 5 questions helpful, make sure you watch this video next.